Welcome back. This is a personal financial statement. I'll go through number one, what you're looking at, what the layout and the outline is first, and then I'll go over my specific numbers and what each category is and why it's important. So, number one, this category first up top is going to be all the income coming in. For me personally, this is W 2 income. And then the second category that you'll see here is all the money coming in from investments that I have. Maybe this is not your situation yet, but I just want to explain what you're looking at here. So all the income is at the top. And then what you'll take account of next is going to be all the expenses. So as a W 2 employee, there are many expenses that are taken out of my check before I receive it. Maybe you're in the same situation. Maybe you're not, but that's what this is, paycheck taxes. And then after that is going to be living expenses. And then all the way at the bottom is now free cash flow that you have to put towards whatever you feel is important in your life. So let's jump into it. Referral Exchange was a company that I worked for where I basically had to sell lead generation services. Only thing I had to really do was open up my laptop, put on a headset, make calls from home. That's what this is. And then the commissions that I made that month as a salesperson, that's what I received. What you'll see under windfalls is just money that comes in that you weren't accounting for, that you didn't necessarily work for or anything like that. It just came in that month. So that's what this is. Mayfair was another company that I worked for as a salesperson. This was a company out of the Midwest, like a financial services company that helped people out with taxes. That's what I made this month. And then the commissions as a salesperson. And then after that, 513 distribution was the money that I paid myself out of my LLC after the mortgages were paid, all the utilities were paid, and my rental properties. That's what I paid myself. So that's what you're going to see as the pre-tax gross, and that's what you should put up top, all the money that came in before taxes. And then what you'll see in the second category is going to be money that I made from my investments. So my first investment property, this is what came in that month. My second rental property that I spoke about in the last video, that is what came in that month. A family member of mine was actually renting a room for me. This is what I had her pay to me in rent. And then these other little amounts were for from investments that I have that pay out every single month. But this is what you should put as the gross. All the monies that came in every single month, you definitely want to take account of it. And then after that is going to be all the money that leaves and goes to the IRS and the state and all the other organizations that need to get paid before me as a W 2 employee gets paid. So these are the paycheck taxes that got taken out this particular month. And then I went ahead and I lived my life. So I went to go eat out a little bit, got my groceries, of course, personal. For me, it might have been this month me going to get some basketball shoes. I like to play basketball. For you, it might be getting your nails done, getting your hair done, going to the movies, going to the baseball game, going to the hockey game, going to these festivals that I see people going to. You want to take account of every single thing that's every single area where your money is going each month. What you don't want to do is hide under the bed, hope things get better, hope you're going to get ahead financially somehow. This personal financial statement in the foundation of getting ahead is going to keep track of every single thing that is going out every single month and every piece of income that is coming in every single month. That's what the purpose is. So these monthly expenses you want to keep track of. And then after that is going to be money that can now flow freely. That's what cash flow is, free money after all other expenses are paid and taken care of in your life. So for me, this is how much I put into my brokers this month. Then this is the Roth IRA, of course. This is for my 3 to 6 month fund. Other people like Dave Ramsey might call it the emergency fund. Cash Plus is basically like a high yielding savings account that I use, and then fund money that was put into this account. So this amount was after taking care of all my obligations to the state, to the IRS, to those organizations, and then also taking care of all my monthly obligations that were for me personally. If you were to take 8,281 and spread that out over 12 months, then you would get $100,000. So, what is important in the proper percentage that you want to save is 40% of your gross. So this pre-tax amount, 11,073 times 40% for the high earners, the people who are really, really, putting their financial situation at the forefront, you should at least be putting away into a savings account that will eventually go towards investing 40% of what this pre-tax amount is. 40% of what this pre-tax amount is. 40% of 11,000 is only 4,400. So for me, this particular month, 8,281 divided by 11,073 is 75%. I have a savings rate of 75%. So of all the money that came in, from my W-2 income this particular month, I saved 75%. So now you can see how that can quickly start to snowball if you do that every single month. And it would not be possible if I were not aware of and had command and control over how much money was coming in every single month and where it was going. I hope this helps. In this real world example, I mean, I can't be much more transparent than giving you my own personal situation from this particular year in 2024, February.